What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Happy Tuesday to you. Hope you guys are doing well. Let's talk markets. This morning, I think we had Trump speaking. And so far, stocks continue to just be in a never-ending upward trend, it seems like, with one of the best winning streaks I've seen in a really long time. Since pretty much the end of March, all throughout April so far, all of April has just been a ginormous uptrend in stocks. Probably one of the fastest recoveries I've ever seen outside of, well, about this time last year. Although this time last year, we had a much larger drop in actuality from the stock market, but then also a V-shaped recovery. So these things are becoming so common in markets. And it does make me think about this. I'm like, you know, every single time the market has a sizable dip, there is a V-shaped recovery. And I heard someone say recently, I was listening to a discussion board, and people were talking about markets. And obviously, one person pointed out that basically this is easy mode markets. Now, I know I'm not trying to gaslight anybody because trading is hard, but in regards to, if you're somebody who watches stocks, right? If you're somebody who watches indices, you watch stocks, and you've been on the long side, it has been the easy money trade. The easy trade has just been buy every time the market drops hard, right? And I'm bringing this up because people made that same mistake with gold recently, right? Where gold was in this never-ending upward trend, and people said, well, okay, so gold is easy. All you do is you buy it whenever it goes down, buy it whenever it goes down, buy it. And that strategy was impenetrable between 2023 and 2026. You never lost on that. Nick always has a cough these days. I don't have a cough. I'm just clearing my throat because I just woke up like an hour ago, just had breakfast. So I haven't been talking very much. So my voice is warming up. But it is something worth mentioning, because what happens with markets is people get used to what's been going on, right? So they look at a market like the Nasdaq, and I will never forget this the rest of my trading life. I remember during like, I want to say it was like during this period of time. It was a couple years ago. I woke up or I saw somebody on Twitter make a post that was like, trading is really easy. Step 1, wake up. Step 2, buy the Nasdaq. And I think they were serious. Like they were not even kidding. And for a period of time, that is the case. And especially if all you've done since start of April is wake up, buy the Nasdaq, you've done incredible, right? So what I'm pointing out though is that just like with gold, right, where gold kind of people lost the plot where it was like all you had to do is wake up and buy gold whenever it's down. People do that with stocks too, and it works until it doesn't, and that's where I think the doomer boomer person is going to say the younger generation has never experienced a prolonged down market, and to their credit, it's kind of true. The longest bear market that we've seen in a long time was the one in 2022, which in 2022, you saw stocks go down by a margin of 27%. And it took them about 750 days. Let's call it a little under 2 years, or a little over 2 years, to get to that back to break even, right? So that is a drawdown, that is a bear market, but it is not nearly as bad as the people who have been in markets for a lot longer, who have experienced a 2008 and a 2000. These, I've never experienced them. I've never traded in them. I've never invested in them. I have no idea what it is actually like to watch that unfold in front of us, but I can imagine it's pretty painful. And I think that like studying your history is important to the point that like people get used to and expect this kind of move now. How long does that go on? Well, certainly it's gone on for a long time. Like that's been the correct play. Most of the time when the market panics, the thing to do is just to buy the dip and watch it rip. But there will be a point, I don't know when. I'm just pointing this out because I want people to like, if you think there is an easy trade in markets, that is perfectly setting up for cannon fodder. Like the idea being, there will be a point where the market dips and it does not rebound quickly. There's a point where the market dips and it really dips from there. And I don't know when that is. I don't know if that's going to happen anytime soon or not. I'm just pointing out that like, just like with gold, where I've been talking about how a lot of traders have really struggled in the last 2 months, 3 months with gold because they had been growing accustomed to the never-ending upward melt up that was going on in gold. If you were bullish gold between 2023 and 2026, it was hard to mess that up unless you're like day trading and like just, but I'm talking about like swing traders or, you know, anyone who would buy meaningful dips and hold on to them for more than 30 seconds, right? For the most part, it was hard to mess that up. And so people get used to that. They look at that and they say, that's the new norm. That's how you trade gold. I'm a gold pro. And then when gold changes up on you, that can be crushing for people. What caused the downtrend in 2008? A combination of many things that just kept coming. You had an oil prices going up dramatically during that time. You had a financial crisis with the banking world in the United States. The Fed policy rates, they did try to actually cut interest rates dramatically during 2008. And yet, it wasn't enough, right? So that's the other thing, is that the other thing is when stocks fall in recent decade and a half or so, the Fed steps in and starts printing money. And that works, but not always. In 2008, it did not work. In 2008, the Fed started coming in and printing money, but it was too late. The Fed was printing, right? That wasn't enough to save the market. So we've also come into the thought process as young traders, young investors, that when the Fed steps in, it's 100% win rate. When in actuality, go back to 2008, that is not the case. However, that's a very rare circumstance. I mean, there was a great financial crisis. The world thought the financial system was going to collapse. So the point is, you never know, and you should also never get too comfortable with a trading idea. If something seems like easy money in trading, be really careful. Because there just never is. There just never is a thing as free money or easy money in markets. And if there is, there's a catch that you don't know about. For example, if you sell options on Netflix, which I do, I'm aware that Netflix offers very high premiums. Like if you sell puts, if you sell calls, you get paid a lot. in premium, right, for selling those options. But that was wonderful. But then look at this. You also have periods of time where the stock can absolutely crash. Same thing goes for Meta, right? So the other way of saying this is that like certain stocks have remarkable upside when you're right. Tesla, Meta, Netflix, AMD, these companies, if you hold them and they do well, you can watch your investment double, triple, quadruple. But for that easy money, when things are going well, the market always comes back to take its price. And its price for those types of stocks is volatility. Meta during 2022 dropped by 77%. I'm showing you this because, again, there's no easy money. There's no such thing as easy money in trading or investing. Where there is some kind of pro, there is always a counteracting con. Again, you wonder why not everyone you know trades or invests. That is why there's no easy money in it. It's hard. Anyways, sorry for all the theoretical ranting here this morning. Let's get into some more charts for today's action. Oil up about 1.6%. Stocks are just slightly higher than yesterday, though it feels like they're up a lot because, of course, we had the gap down that again for the fifth week in a row, not even kidding. We saw the gap down and rally, right? Bad news over the weekend, good news during the week. That's what it feels like recently. Trading is hard, yes. Like the sooner you accept that and internalize that and realize trading is very, very difficult because markets are hard to predict, the better off you'll be. Because once you set that as your expectation, then you'll actually embrace okay, I want to learn. I want to actually I recognize my ignorance. I still am learning things every single day. The sooner you accept, I'm not as good as I thought. A lot of traders, it's the U-shaped stuff. We talked about this, the Dunning-Kruger effect. Is that right? Where everyone, when they start out trading, thinks they're really good at it. And they think how hard this can be, or how hard can this be? And then the longer you do it, the more you realize, gosh, I do not know. There's so many things that are difficult, impacting price. Do you understand how the jobs market functions? Do you understand how the Fed works? Do you understand how inflation works? Do you understand how 401k passive inflows work, ETFs work? There's so many things. Do you understand the bond market? Do you understand future front to back dated options and futures contracts, right? You have so many different things. Anyways, Mr. Klexi, I've responded to you a couple of times. I don't know if you're not seeing my message, but the EdgeFinder doesn't have data prior to when we started recording the data. So we have about a year and so of data. That's as far back as the historical score records go. That's when we started recording them. Yeah, we've got news here coming out in about 30 seconds, guys. Today's news is retail sales, and let's see. Retail sales, and we have Trump speaking. I think was he already speaking? This morning he claimed Iran had violated the ceasefire numerous times, and yet the stock market's up. That's how that rolls these days. Retail sales coming out here in the next few seconds. Let's see. Just switch over to our all markets view. See if retail sales does anything this morning. Usually it does not do a lot, but you never know. Sometimes you get some surprises. Dollar index, little firm here on the release. Gold slightly lower. Stocks mixed. Silver slightly lower. That's going to tell me retail sales was a little stronger than expected. Let's see. Yep. 1.7% better than expected. Core retail sales better than expected as well. And so, yeah, that checks out. A little bit of strength there in retail sales numbers. Why is that? Let's break this down. Let's do a little bit of macro understanding here. Why is that mixed for stocks? Strong retail sales means strong dollar, strong or yields remain elevated, which is basically the Fed may not feel the need to cut interest rates. Remember, Fed cuts interest rates when they feel they need to. That they will say all that they want. The reality is that the Fed cuts rates when it feels that it is needed in order to help the economy, right? And so if retail sales, jobs data, some economic growth metrics have recently been showing that the economy is okay, the Fed won't cut rates. Stocks like rate cuts. So no rate cuts means this should make stocks go down? Well, hold up a second. What does good retail sales data tell you for stock earnings? It's good. So retail sales is kind of always a confusing one for stocks because good retail sales is good for earnings. Good retail sales is bad for rate cuts. So it kind of has this mixed response. It's a little bit more clear when we take a look at dollar index, which again is moving higher, not by a lot, but it's moving higher in response to strong retail sales. That makes more sense. Gold, right? Down. That makes sense because strong retail sales is evidence of perhaps a stronger economy. Stronger economies, gold becomes less attractive. Remember, if you want to talk about a scenario, we automate everything I'm about to tell you and everything I have been telling you. That's the purpose of our software that we build. If we pull up gold, for example, by the way, my goodness, stock's getting very bullish readings today. If we look at gold, right, and isolate the macro for a second. So retail sales numbers, when they update here, will come in continuing to be bearish for gold, right? They haven't updated yet, but the new data will update shortly. And when it does, it will maintain a bearish read for retail sales in effect on gold. Why does that make sense in our scorecard? And if you're newer, check this out. Chat, get EdgeFinder, trust me. I appreciate it. Thank you very much. Yes, you should get the EdgeFinder. It's a great tool. I'm totally unbiased, and I'm also selling it to you, but it genuinely is. It is genuinely a really great product to get if you are interested in getting set up with this sort of thing. In just a second, we'll bring in Chris Pulver, but give me a second here. I just want to show off this feature here. So this is our asset scorecard. We've selected for gold, and what this does here is we can look at inflation statistics, economic growth statistics, jobs market statistics, and build a automated scorecard of how these economic metrics, right? You've heard of retail sales, you've heard of CPI, you've heard of NFP, unemployment rate, all of these statistics, but without having to have a PhD in economics, what EdgeFinder does is it automatically pulls in this information versus forecasts, and it generates a report card of how these things are impacting the underlying chart. So right now, when we look at the underneath fundamentals for gold, we're getting a -2 score. What that's telling us, if we look kind of a little bit more granular, the jobs market data has been coming out stronger than expected recently. That kind of dulls the shine of gold, if you will. Inflation data has been cooling, though, more, I should say, not cooling absolutely, but cooling relative to what expectations have been, right? 4.6% PPI, we actually just got 4. So 4 was better than expected. Yields trending a little bit lower here. That's good. That's dovish for gold. So these are bullish facts, but we have to look at the conclusive evidence. What many traders do, what many investors do, they pick and choose the macro that they want to, right? We don't do that with EdgeFinder because it's a systematic approach. The cool thing about EdgeFinder is it removes bias by taking all of these metrics and just punching out all of the bias from all of the different readings. So the economic growth statistics, they've actually come in decently strong. That's negatively impacting to gold. So we're not using a bias here. We're looking at, yeah, sure, inflation looks okay for gold, but economic growth metrics have been a little bit punishing towards gold, like the retail sales we just got. Jobs market data has been stronger than expected recently, punching in a more bearish outlook for gold. This is not a biased thing. It is just a machine, and that is the point. It punches out a scorecard for all your favorite charts. If you don't have access to EdgeFinder, right below me, there is a QR code that you can scan, or we'll drop a link here in the live stream chat to where you can speak to a member of our support staff, because we just launched our big sale this year. We're launching this we launched the product 4 years ago during the month of April. And to celebrate every year, we do our biggest sale to get you 40% off for a limited time. However, if you message in using the link that's just been dropped in the live stream chat, our support team can actually get you 45% off on the product. And if you need it, they can set you up with a payment plan to set up installments so that the product is more affordable to your current budget if necessary. We understand that the dollar is expensive in many other countries, and so we are accommodating that our team is able to do that. So our support staff is on the line. Hit them up with a message and they can get you set up with a payment plan if that is something that you're interested in. Up next, joining me here in a second, we'll bring in my friend Chris Pulver to take a look at some markets and see what he's got going on. Hey, Chris, how you doing, man?
Good morning. What's up?
Not a lot. Good to have you back on the show. Chris, we're in a never-ending melt-up market, it feels like. Just up, up, and away. And I was pointing this out earlier, but without even kidding, it's like 5 weeks in a row where over the weekend you get some scary news, we gap down, and then we go higher during the week. Gap down, go higher, gap down, go higher. How much more is this going to repeat itself? I mean, this is a crazy, consistent, like coordinated, might I say, even feeling type of movement, right? On the weekend, you get bad news. During the week, you get good news.
Well, the weekend news essentially broke the winning streak. We had 13 days in a row on the Nasdaq, 12 out of 13 the S&P. I was pretty heavy on that yesterday to catch that streak break. But this isn't something I necessarily want to be fading. I have not been liking how the expected move has been pretty small every single day. Like last week, I think four out of the 5 days last week, the market moved beyond what the broker had set for the morning's expected move, which is crazy terrible, actually. That's like really inefficient. I don't see that a lot. I just want everybody to know that this pump that we saw, this rip, is the 100th percentile of how aggressive the bulls have been ever. Like we haven't seen 13 days in a win streak or 12 out of 13 since like 1950. Crazy, furious, bullish price action. I think on a positive note, the market just tried to quickly get back to where it thought it should have been before everything with Iran and everything with the dispersion trade. Things got beat up. I think on an individual stock side, things got beat up enough where, the index is down 10 to 13% respectively. We had stocks down 10, 20, 30+%. So I think there was quickly like the quick pump on some, but what I'm asking myself, Nick, is what got us there as far as like this rip was the big catch up on Nasdaq. Essentially, tech like led the way with 13 in a row. But I almost wonder, is this like sustained? Are we going to have like this tech rally? But remember, like tech was beat up, software was beat up. Is there still more like AI dispersion trade coming, AI disruption? However, the posture looks good. I've seen a lot of stuff on Twitter. I'm seeing a lot of stuff on social media where people are talking about, oh, this is another trap. It's like, well, if it's a trap, then we're coming back below. I'd say if we close back below around 7,000, if we close back below it, I'd be a little bit more cautious. I'm still buying in here, even if the market does find a low and work its way back up. I think we could kiss that low, but I don't think we're necessarily going to close below that. So worst case scenario, I think like we retest those 6,300 lows, but part of me thinks this market's just going to use some typical fib stuff, which is we pull back 23 to 38%, and we're trying to find a way to grind higher for the kind of foreseeable future. And whatever this is, whatever you want to lump this in as, I mean, the Iran conflict was like the bow that kind of broke the stream of news, right? It was so bad and negative for weeks at a time. It's like, okay, we'll go down, and it finally did. But all of a sudden, it's like a little less news is good news, and not as bad news is good news, and then all of a sudden we have a ceasefire in the market. Just absolutely loves it. So
Chris,
crazy
this
market,
is
man. All a worry, dude.
Yeah, no, for real. And if you look at this chart, if we can throw it up on my side, this is pretty fascinating with looking at the S&P 500 on a weekly chart. If the pattern holds, right, where you have these very sharp, very quick drops, the pattern has emerged that, let's say this is the move, you drop dramatically, and then we V-shape. You know as well as I do that in recent years, the pattern has been next, it just goes straight, right? Yep. That's been the theme. Take a look at 2020, right? The most violent down day. I was looking at some of those percentage days. You had days on the Dow Jones that were down 11%, couple days in a row, like 8%, 7%, 9%, 10%, 11%, like a violent sell-off. And it's almost like the harder they fall, the stronger they rise here when it comes to stocks in recent years. Because again, what happens next? We V-shape recovery, and then we break to runaway land. Then we can see now in 2022, you kind of took a deviation from that. You did get some oversold readings that did not quit. But I'm saying like this next leg, like after a break of the highs, there it is, right? Break of the high, boom, up we go. Here's one in the big one that we saw back in 2000. Actually, there's two. The August 2024, I think, was where we had that really sharp intraday. You made that move, and then boom, up we went. Same thing in 2025 when we had this time last year, the tariff stuff. We V-shaped recovery, got to the back, and as soon as you hit those highs, it was like run for the hills. So the question is, if that's the pattern, do we see it repeat? And so I hear and I see those types of comments and posts that you mentioned you saw too, where you get people saying, okay, nope, this is going to be the break. And to be fair to those people, right, at some point the pattern breaks. I was mentioning earlier in the live stream that I was listening to somebody describe how the markets are getting too easy. These V-shaped recoveries are getting too easy. They're too predictable every single time. They're the same thing. Not necessarily.
Are they though?
Well, that's what he was pointing out.
Right. It's actually, like in hindsight, they're predictable, but it's like, did you buy that dip? I mean, I know one person I talked to that was actually buying a 9% correction versus me and probably a lot of other people were like, oh, 10, does this get worse? 10 becomes 15. I mean, the market breadth didn't deteriorate the way that I thought it was buyable. It's like we were at 17. I was waiting a little bit longer. It's like I didn't get the signal, but
yeah,
I don't know.
Yeah,
Anyways,
no, and I'm the same way. I did buy some
too
stuff,
easy.
But
okay.
I bought some stuff, but I definitely didn't deploy the amount of capital that I would have liked to. But I think the bigger point overall was the idea that, okay, most of the time the markets have been getting trained, conditioned. Retail has become the best player because they buy every dip over 5% aggressively. Sure. And the point,
retail is also getting slaughtered on the 10% correction. Like, how painful was the 10% correction when it probably should have been way worse?
Right. So I just think that, like, people are getting too comfortable with that buy the dip strategy because it's worked so well. And anything that's worked so well eventually finds a way to get its money back, if you will. So sure. I don't know when, but I think prudence, cautious stance will ultimately do okay.
Well, sure. And I mean, the reality too, is like, think about how much this market means to the economy. Everyone says it's not the economy, which is true. It's not the economy, but it means a lot to the economy. It means a lot to the wealth effect in the economy. It means a lot to the wealth effect of every consumer that's propping up essentially our consumption in the US. It means a lot to the world to have this global liquidity that keeps feeding itself into this system that like is designed to go higher. So I think the reality is, like, you see a lot of bear stuff out there, and bears sound really smart and rational and logical, but we're trading something that for a century really doesn't have to be. It's trying to go higher. It's built to go higher. At some point, yes, it breaks. But I just think that in 2025, if you learned one lesson, it's that Michael Burry is not managing a hedge fund anymore.
Right.
It's like, it's that type of stuff where it's like 2000, like bearishness is fighting an uphill battle. It is swimming upstream for the entire history of the stock market. And what you're asking for is something of the most epic proportions of a Great Depression or a Great Recession. That's what you're asking for, because otherwise it's just a correction. And corrections can feel so crazy and painful, and it's going to get worse, but you just have to ride this stuff out. I mean, if the market is down 30, 40, 50%, it's going to be awful. And if it's down more than that, it's going to be awful. But if you can survive it and have some cash to buy from it, you're going to come out pretty well in the big picture. I mean, every gap lower has been filled because we had all-time highs. And when the market's at all-time highs, it's a lot easier just to keep poking, and keep making all-time highs.
Yes.
Versus, I mean, I just think that's why the market was so like eager to go as fast as it did. I mean, Nick, we literally had not just like the distribution curve typically is pretty fair, right? If you have, the days of plus minuses, a lot of it just kind of falls in the middle, and a lot of it's kind of half of 1% either direction. We were out here, the 100th percentile of how bullish everything was and how inefficient everything was that entire rip. 12 out of 13 days S&P, 13 days in a row Nasdaq. I mean, dude, I was aggressive last week, And I got toasted on Tuesday last week because I was like, oh, we've had a 10-day win streak, 11-day win streak. I'm going to short this thing.
Right.
And I did. And I was literally off by 5 points, but 5 points for calling the top makes a big difference. I ended up taking a loss, but I got it back and that's fine. But the point is, that's how aggressive this market just ripped in the last couple of weeks. And the good thing is it's a sigh of relief. What I'm curious on is, does this continue to be like, you got to be a stock picker to find these gains? Is this going to be a semiconductor play? Is this still going to be scarcity? Or is this like, well, everything's good now, right? So you can buy your software, you can buy your beat up stocks, everything that's on sale. Or was that just a pump, a de-risking? Was that get out of trapped longs? And all of a sudden we see like where the dust settles, because earnings wise, it's still Mag 7 earnings are dominant and semiconductor growth is dominant. And other than that, I mean, a lot of stuff has been mediocre. I mean, the RSP didn't hit all-time highs, right? Our RSP is not at all-time highs. QQQE just hit all-time highs, where the actual Nasdaq was higher. So,
well, Chris, I think you brought up a really good point there, and the answer is, or the reality is, as you pointed out, it stinks to be a bear. The bear is trying to play the bear side is so difficult, and like you said, even if you're right in calling 2008, 2000, like the system is designed to go up. They will pull every lever in the book to like stop. I mean, at one point in, I think it was 2022 or 2023, like the Chinese regulators, now, of course, US might be different here, but they like stopped people from being able to short the market. Like you can't short anymore. And so nobody wants stock markets to go down. There's levers that they will pull. People will do everything to keep it from going down, et cetera. Point that I'm saying is like the system, to your point, has been designed to go up over time. But then you brought up that last part there. Where in that system do you want to be postured? Do you want to be postured in semiconductors, right? This is, people ask me all the time, why don't you trade futures? Why do you trade ETFs so much? It's because I like to pick my spots, right? So I can like trade SMH, right? That's going to be a collection of stocks in the semiconductor world. Or if I want to be more tech, I can go XLK. If I want to go real estate, I can get real estate exposure. Like I can really pick my spots in a system that, broadly speaking, tends to go up, but not all the time and not every part. Here's software, right? Software has been a beaten down part of the market that I've been playing a little bit in. I've got some, I bought shares of Intuit, which have done really well so far for me. I was able to catch right around the lows there. But yeah, that's why I trade ETFs, is because I can pick my spots within the index, kind of broadly speaking, going up over time. I think that there's that opportunity to pick your spots a little bit more closely. Chris, what do you think about gold here? Gold continues, in my book, to be super boring from a longer term perspective.
Get used to it.
Yeah, right. From a longer term perspective, we've gone from this clean upward, never ending melt up to this choppy sideways. Is this longer term maybe an opportunity to accumulate some gold?
I think it is. I think that now that it has become boring. Look, you have an entire crowd out there. Call it Wall Street bets, call it whatever you want. You have an entire crowd out there that is just looking for the hottest action in the market, and it's always going to be something different. It was gold, it was silver, it was oil, it is something else. Maybe it's software, maybe it's nothing. Maybe it's freaking Avis, right? I sent that chart out to you, or over the weekend. I sent that message. I'm like, I looked at 5 different trades yesterday on Avis. Couldn't find one that I'm actually happy with. The premiums are, dude, it's 100% Ivy rank. The premiums are trash on either side. It's like, I'm not going to short it. I think that it could just continue to squeeze higher. We're at $500 right now. If anybody knows what I'm talking about, it's CAR. So Avis Budget Group is up 400% or something insane like that in the last couple of weeks. There's 500% now because, oh my God, dude, it's up $100. That's yesterday's candle, 494 to 608. So you can't short this shit, you know?
Yeah, that is.
So I try to go both ways. Yeah, I was looking at something like, okay, if I did a, inverse, I drew that terrible, but if I did like an inverse iron condor where I can trade it either direction, if I do an inverse like iron butterfly, I trade it both directions. This dead zone, by the way, had to be like over $100 in order for me to get any premium, and the risk was bigger than the reward. So you can't put on a trade that was, it didn't set up for, if you wanted to get upside, you had to clear about $100 move. If you want to go downside, you had to clear about $100 move. That's huge, man, on a stock that was, under $100 like 2 weeks ago.
Yeah.
So it's like I'm saying, that Wall Street bets crowd, whatever you want to call them, it's like they're searching for stuff like this, and then when it's done, it's old news. Go find something else. And that's what it's like. I don't want to chase that stuff, dude. It's crazy to me.
The shiny objects crowd.
And for every one car right here, for every one car, there's probably 10 that don't do anything. There's probably 100 that don't do anything. So
Yeah,
it's
that's
just, I don't
exactly
know.
right.
I think that's never been my my MO as a trader. It's like, I'm just not interested in chasing this shiny object. I'm sure it's great and it's exciting when you're right, but not ever. I mean, Nick, how many stocks look like this? And when they do look like this, what do they ultimately become?
The other way. It's
Right.
like
It's going to be just
almost
as
like
fast the other way, dude.
and then the craziest story I've ever seen was Carvana, which went like
Yeah.
that, then went back the other way, then went back up again, like just had the most insane kind of back and forth.
Oof, yeah.
Yeah, just a wild story on Carvana. Chris, just another, of course, we love looking at our sentiment gauges here, looking at the
Yep.
put to call ratio. You actually sent me this message a couple days ago that we hit like the most extended call volume that we've
15
seen in a
years.
very long time.
Yeah.
Yeah. And so I was just pulling that up, right? Because we had this huge surge in call volume. And then you can kind of see yesterday's trading action, which was the first red day. It didn't even feel like a red day because you gapped down and then we zipped up all day long. But what's interesting here is that you had call volume off the charts and one day where you weren't, continuing the melt up directly higher, and stocks, of course, or the put call ratio kind of normalized there. This is another thing where if you're watching this market, call volume being hit so hard, like everyone kind of buying calls, does make me nervous for a very sharp corrective pullback, especially if I have no idea if this is going to happen. But if there was a geopolitical headline that came out that really rattled the boat, like really shook things around all of a sudden, the fall off could be violent, just like the rally higher has been violent. And I don't know that that's obviously, I'm not trying to predict that that's going to happen, but positioning is important here, right? The crowd is all leaning in, at least in short run, right? I think in longer term, and this is where we have kind of a contradicting view, the AAII sentiment still has that wall of worry to climb for us, right? Where you still have a lot of people's outlook on the market being kind of pessimistic. But the short term, the call volume story had recently been telling an opposite story where you have, the options world flooding the call side to an extreme degree. And we'll see where it takes us. But that does make me a little bit cautious for what that downside could look like if you had an ugly headline hit the wire.
Yeah, we've had so much structure in the market. Now that we broke above 7,000, I think if we tread water here between all-time highs and 7,000, I think the market's still like in this kind of bullish space. If we have an aggressive, let's say in the next, let's say this week or next week, since we got through OPEX, we got through the VIX expiration last week, since 7,000 should be a little bit of support here. If we break through that, remember, we chopped and did nothing for nearly months between 68 and 7,000. So that is where there's kind of this breeding ground of like, where is the next big move? I wouldn't necessarily be bearish there. I would just say if the market falls back into there, it's going to be hard to have the next catalyst to drive us up. I mean, this was, again, the impulsive move is to get higher. The little pause and kind of shuffle would be just a wait for the ability to accumulate more and then see this market probably drift higher. I think this speed may not be seen for the rest of the year, in my opinion. So having the thrust of the upside, clearing all these highs, now it's like, all right, so the market just settles in and then it finds a way to get that trajectory where we have a lot more positive gamma, we have a lot more positive flows. The market's destined to kind of just try to drift higher. We still have all the stuff with the big beautiful bill. The market is probably able to ignore a lot of stuff that Trump is saying right now around Iran. I still don't know what the end game is. The ceasefire, I don't even know what the status is. It's like it's over, I guess. We're going to war. Are we not? We already won. I don't think the market cares at this point. So not like today, so Trump is on the calendar today. I want to say we have Warsh testifying at 10 a.m. I think the market, I mean, he's not Fed chair right now. He's coming in May. I do think the market might be interested in maybe testing him. If the market has like a nasty, 3, 4, 5% correction, it's like, does he step up and say something right away? Is he going to side on hey, we're going to be a little bit more bearish where here's our like kind of creative QE, or is he like a balance sheet guy that wants to do more QT and go like the complete opposite of why I think everyone thought that he was brought in as Fed chair? So, that's what the markets can maybe test. It's like, other than that, I'm kind of out of ideas as far as what's the next catalyst. I mean, this stuff in Iran was noisy. The dispersion trade, was obviously a lot to have, but it didn't do a lot of damage to the indexes. I really think the market's postured well. I'm starting to get a bit more aggressive as far as like, well, I took some trades this week that have stop losses right here below 65.50. And, if it comes down to retest, I'm still thinking the market just stays here. 2015, 2016 is maybe the last time we saw mostly sideways price action. But where'd that lead us? We went sideways till we broke out in late 2016 to all-time highs.
Yeah.
So if that's what it continues to be, maybe, but it's like, I will still kind of always err on the side of bullishness until, I'm proven wrong. But I also have plenty of cash on the sidelines. It's just like, all right, I'll wait it out. I'll ride it out. I'll try to be conservative. But for right now, I think the market's, able to go higher. To what degree? I mean, I wouldn't be surprised to see it hit 7,400, 7,500, 7,600. Anything higher than that in the 8,000, I'd be like, okay, let's maybe look at maybe cooling this thing off a little bit. But until then, I think that you're just going to see a lot of churning, and I think the market's still going to grind higher.
Yeah. No, I think it's one of those things, right? You have to play the patience game, because when you see these sort of ripperooskies to the upside, it can be like, I saw a lot of comments, myself included, like full transparency. I wish I would have been able to get a little bit more of the stuff that I wanted to buy bought. I mean, I did sell a lot of premium, which of course I'm happy to have done that, better than being short in this rally, right? So I sold a lot of premium on a lot of stocks. And of course, I've bought back a lot of those short put positions. I made decent profit in all this. But of course, hindsight's 2020. I shoulda, coulda, woulda been buying, all of the names down here and just sticking them in the portfolio. But that is hindsight, very, very much so. Because again, had we seen this thing get uglier, we would have obviously been very glad to have been sitting in more defensive posture. That being said, I think also patience is a virtue here, because I don't think you're going to see, to your point there, the trajectory that we've seen. I don't think you're going to see that for a suspended period of time. I'm not saying it's impossible. So don't clip me and come back and show me that it happened again, because it could. But I'm just pointing out that I think probabilities, which as traders, that's all we've got, guys. Nobody has the future in front of, like, we don't have the future. All we have is probabilities. And we look at this, we say, Christopher, as long as you and I have been staring at markets, how common is that kind of move? Well, you already told us it's the 100th percentile. You don't get that kind of move very standardly. So it can be very, the fog of war, quite literally going on right now, can cause some very sharp moves. And some very rare events that what people will start to do is they'll say, this is the new norm. This thing goes up every day. I'm going to start buying calls. And that's exactly how we got to that conversation about put call ratio. I also want to just show you guys another thing here. Again, I reiterate over and over, as traders, don't let recency bias cloud your vision. Look at history, look at data, look at studies. And that's what we do here as much as we can on this show. So if I look at 5 consecutive up days, honestly, we need to update this report to include 10 consecutive up days, because I don't have that study in front of us, but we do have 5. And, going off of this, it paints a very simple picture, which is when you have 5 consecutive up days, we studied 92 occurrences when this took place. This feels like a tasty live segment, doesn't it?
Yeah.
And the 1 day average return, the 1 week average return, the 1 month average return, they're historically kind of flat to negative. And I think like what that tells you is that if you have this crazy uptrend, it can be easy in your head to think, oh, so it's going to keep going. Whereas history would actually show you through these studies, actually, typically you're down 1 month later, and the 12-month outlook is about 7%. And while that is positive, that's not nearly the average, which is like 10 to 11% in recent times, maybe even more in recent times. So all it's showing you here is that when you have these streaks, pay attention to these streak studies. There's also, there's one that I breakouts. Let's add this. The other one that's kind of been interesting here has been that a new 52-week high has also kind of shown, again, you'd think, oh, we're breaking out, we're going here. The average return going forward, not very good. So again, I think that the risk reward to being patient and waiting for the trade to come to you starts to get more attractive. So just wanted to share that because I thought that the research to me can be a little bit calming in the sense that, like, I don't need to be doing anything. I don't need to be rushing here. Sure, research is just historical examples. It doesn't prove what's going to happen next, but it's something I can hang my hat on and be like, okay, the data tells me this, so I'm going to generally lean that way. And what it tells me is be patient, look for pullbacks, pick your spots, and play the long game.
Sure. One thing on the market breadth really quickly before we go. This is what I was talking about as far as the deterioration. I was really excited to get like a 15 or sub 15 reading before I started. I was going to like kind of close my eyes, grit my teeth, and buy stocks, even for a 30 to 60 day window. It came down to 17. So like I said, I missed that 9.98% correction like you talked about last week. I missed my market breadth timing indicator because I thought it would come just a tiny bit lower. Anyway, this is the comeback trade where now we have 61% of stocks in the S&P above the 50-day. We have 60% of the stocks above the 200-day. So the posturing now of the S&P is like pretty broadly bullish, which is an impressive comeback. The Nasdaq short-term ripped like crazy. We have 63% of stocks above the 50-day, but we're still at 50% at the 200-day. Now, obviously, that breadth can improve. We just don't want to see breadth deteriorate, back down, and all of a sudden it's like, well, S&P is back to 50%, Nasdaq's down to 40%. That could show that there might be some wind taken out of the sails of this recent rally. I still think, if anything, it was volatile. It was, I'm not going to say exciting, but I was going to say it's volatile.
Sure.
And it was volatile both ways, right? We had a 10% peak to trough, 10 to 13% respectively in the indexes, but this rip to the upside to get back to all-time highs was violent. Trump's on the calendar, Warsaw on the calendar today. It's hard for me to look at a move like this here, and see like these are wide open spaces for a plus or minus 35 points today, and think like, oh yeah, this market's going to be really quiet. I mean, it's so easy for the market to just go like 40 to 50 points or fall. I mean, I guess the put side is well supported. I'm just curious on like 0DT if I'd start to get a little bit of skew. I might just do like, I don't know, freaking 5 delta calls and 15, 20 delta puts and just skew the thing where it's like, well, I'm just going to be biased to the upside for right now and see if that'll pay a bit more premium.
Yeah, you might get that melt up here. Also, one other point from Bulent in the chat. Shout out to Bulent. He is a regular, so appreciate you here. Good points here. Mag 7 is still very cheap. Microsoft is at 420 with fair value at 570. The market can go up even more. It's wrong to say that just because it's risen means it has to fall. That is absolutely correct. It can still go up. Again, we've talked about it all day here. The system is designed to move up, and you do have some of those Mag 7 companies still relative to their 3-year cheap. So I think, I mean, my opinion would be if the market keeps going, Mag 7 probably continues to help out there. If you take a look at the MAGS ETF, it still has yet to hit a new all-time high. So there's fuel there. I think we'll see if it wants to keep going. My personal opinion, though, is not necessarily do I think the market's going to go down, but rather do I think the risk reward here is worth a buy? And those are two different questions, because I'm not willing to short the market, but I'm also thinking for me to take a trade or for me to place an investment type of thing, it's not about how directionally sure am I going to go with it, but rather is the risk reward there for me to allocate, capital to. Anyways, guys, we've gone over by a few minutes. Wonderful conversation, Chris. Thank you as always for your input. Great stuff. And we'll see you back on the next one, man.
Tomorrow. See ya.
Yeah. See you, Chris. Guys, up next, we have Alan Perez taking over the stream. You guys know him and love him. Chris and I, we have a chronic problem of sticking to the S&P 500 for way too long and talking stocks and markets. So to counterbalance us, thank you for your patience, because next we have Alan Perez, who is way better at staying focused in regards to going through a bunch of charts. I do apologize. Somebody also asked about gold. I just want to reiterate, I've been really neutral on gold. I still am. Economic data mix, etc. But maybe Alan can do a little bit better of a job taking a look at things like gold and currency pairs for you guys. Remember, 40% off anniversary sale ends soon. Take advantage of EdgeFinder, which is on super sale right now. Get access to the scenario backtest tool like I was using with Chris here just a moment ago. We are going to be adding more features to this. I'm excited to add more studies. This is one of my favorite things in the world to do, is to study historical occurrences to build overall game plans and markets. Up next, guys, Alan Perez. See you in just a second.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good afternoon, wherever you guys are watching this. I'm finally back home. It feels really, really good here to be back home at my desk, back in the saddle here. Like always, feel free to drop any chart markups that you guys want me to go over, any tickers, anything like that. I'll go over it with my honest opinions. Again, nothing is financial advice, but super, super happy to be back here. And let's go ahead and look at the markets here from a top-down approach here with currencies, because I have been away and I haven't really given it much of a look here. But from what I've seen so far, as I've been here in the morning, markets are kind of still where I left them here. As far as last Wednesday goes, we are still by the highs here. So markets are very, very much optimistic on the fact that there is a potential de-escalation resolution there in the Middle East. So markets are high on there. Dow Jones not quite at the all-time highs, but again, markets are elevated here. When it comes to the DXY, similar type situation here. You do have it here at this level of support here. So my question really is it going to get a little bit of a pop? Is it going to, have some support here and continue higher? Or is this level going to fail and then we continue lower? It seems like the dollar index here may be kind of just playing within these levels here. So you look at this level 100.5 where we failed to break out, seems to be like some strong resistance. And then my eye kind of takes me here to 96.5, some this area right here. It seems like this could be the playground for the dollar index. However, we are kind of like in the midpoint of this range here, give or take. So it may be hard to make a directional call right now until you get a decisive move in either direction. If you were to get a pop in the upside here for the dollar index, I think I'm looking to short it as of now. So I would look for a short within these moving averages here, or 99.5, where you feel this gap here to the left, or ideally somewhere around 100.5. And then when it comes for upside, if you find your dollar index here near this level of 96.5, then I'll probably go ahead and look to buy it. Of course, that is contingent on that we have some strong fundamentals in the US. And if I'm not mistaken here, let's go ahead and look at the top setups page to see if we see some dollar crosses here. Dollar yen is bullish, seems to be about it. I want to look at the economic heat map here for the US and we'll see how it's performing. Okay. Not too shabby, not too shabby. Okay, so jobs market is looking pretty okay here, pretty solid. Inflation ticked to lower here. PPI 4% versus 4.6 expected. PCE came in flat here as expected, 3%. CPI neutral as well. Okay, so inflation is somewhat cooling here, but still elevated. And then the growth sector here is not looking too bad either. So let's actually compare this with everyone else here. So we go to the Eco Surprise Index to see how different economies are kind of, printing data releases, right? Are they beating expectations or missing? We have one missing here in the middle, but let's go ahead and refresh that one. And then we'll go ahead and see what's going on here. So it seems like dollar is the third on the list here. Then you have euro and the yen on top. In fact, this euro one is brand new. I don't remember seeing the euro this strong here. So we'll go ahead and investigate that here right now to see what has changed. I did see that the euro asset on the top set of page was actually getting a bullish reading as well. So that may be a potential play for me as well if I'm looking to short the DXY. So for the Eurozone, CPI came in hotter than expected. So this was on the 16th. And then growth is doing okay here, still above 50, which is good. GDP growth slightly missed there. And then the unemployment rate ticked up here April 1st, but I'm sure we'll get some new data here freshly. So let's go to top setters page because I did see that euro asset, like a individualized euro, getting a bullish reading here. Yes, getting a bullish reading of 6. So we can actually see how we can trade that potentially. I do like that idea if I'm looking to short the dollar index. So if you were to get dollar index into 98.5, like up into these moving averages, this could be a short attempt here. And then I could do that by going long the euro. So what that would look like here, let's look at the euro dollar chart here. It's a very clean chart. One thing I like about Forex here is that it reacts really good to zones, right? You don't have to overcomplicate it. The technicals, some argue that it's annoying because it's just choppy, and they usually, trade within a range for some time. If you can see here, the euro has been trading in a range for about 326 days, give or take, right? But I like that. I like it because you can pretty much bounce off of levels here, and it respects the technicals quite well. And then it just becomes a matter of lining up the fundamentals for your trade, right? So in this case here, we're getting a bullish euro reading on the EdgeFinder. Now it's just a matter of finding where I want to execute, right? So if I'm looking at this, between this 326-day range here, and prices right now at what could be a level of short-term resistance, I want to buy the euro on a relative discount. So what I will look for is a pullback, and off the bat here, my eye takes me to these moving averages here, right about that 1.16700 level. So if you were to get a pullback in the euro to somewhere right here, this is where I would like to go ahead and buy for some support here. And then I would target something like 1.18 or higher if we go ahead and break above that. So I do like that. I'm going to put an alarm right here. It is really that simple sometimes, guys. So if you see a bullish reading here on the EdgeFinder, you just wait for that pullback and then execute the trade. Once price gets here too, you have to make sure that the reading is still bullish for the euro, because if it's not, then it's invalidated, right? So one thing to go ahead and note there. So I like the euro. I do like the Aussie basket as well. This is something that I'm waiting for a pullback on. It seems like, the market is very much poised on for risk on. And so if I put a Fibonacci retracement level, a pullback for me would be somewhere within the 38.2 or the 50. And that 50% retracement level lines up right where that 50-day moving average lies. So I do like that. However, in the past, I have very much missed pullback opportunities because this particular currency pair, Aussie US dollar, just doesn't like to give pullbacks. It just continues ripping higher. So ideally, I can participate in the Aussie basket long via Aussie dollar, Aussie CAD, Aussie Swiss. I like those pairs, Aussie Kiwi as well. Go ahead and buy that on a pullback. So we'll go ahead and see. If we don't get a pullback on Aussie dollar, I'm also open to the idea of getting a break and retest on this pair. So perhaps, this level here, 0.72 thousand, very strong level of resistance. You can see that we've held it strongly in the past. So if you were to get a break and retest type situation, I would like to continue this, momentum to the upside. And then I would target somewhere like 0.76 thousand, 0.75, if I'm just looking left on the chart here for some key levels. I do like this one. Let me verify to their inflation, because that was a big reason for this trade idea that I have. The Australian economy has been struggling with elevated inflation despite the war. They were looking to hike rates, and now that you add this on top of that, they definitely are looking to hike rates. So we'll go ahead and see. Okay, did tick down lower here to 3.7%. So still well above their target there. So we'll see how they intend to address that. Let's look at the economic heat map here for the Australian economy as well. Okay, not doing the best. Let's look at eco strength. Eco strength, they're at the very top of the list there. Eco surprise, not okay. They're somewhat weaker than most pairs there. So what I would do is definitely wait for a pullback. I'm not gonna chase the highs, knowing what I know now. I'm not gonna chase the highs here. I'm gonna wait for some kind of a meaningful pullback. For me, that will be that 50-day moving average or even lower, ideally. And then I go ahead and buy the Aussie dollar. For me, the risk or reward is not there. If the fundamentals are not as strong, you do have the central bank still leaning hawkish, right? So that's obviously what kind of decides the trend to the upside. And then you do have the Fed, which is looking to cut rates, when they get a chance to, right? They're actively looking for that green light. And then you do have a new Fed chair, right, which is looking to kind of go ahead and achieve the objective that the president wants, which is lower interest rates. So you do have that at play, which is going to go ahead and, as long as that stays intact, Aussie dollar trend should continue to the upside there. The only thing is now you have to weigh the risk to reward. If you do have the fundamentals that are not as strong for the Aussie dollar, then I don't want to buy these highs, right? I want to wait for some kind of a meaningful pullback to absorb any kind of drawdown. Because if you just buy it here, fundamentals continue to stay somewhat iffy or lackluster there, then you can go ahead and get some drawdown. And if I can avoid that, I want to avoid that for sure. So that's kind of my thought process on Aussie dollar. Let me go ahead and look at the chat here. Thoughts on, okay, so we got a lot of recommendations here, which I love to see. Hey everyone, hey Sluggy, hey Cycling Club, Jeremy, what's going on, man? So glad to be back at the office. Okay, so pound Swiss, we'll go over pound Swiss. Euro CAD longs look decent. You know what? If you consider that the euro is actually getting a bullish reading, and then you have the Canadian dollar, which I know for sure is getting a it's not the strongest. I kind of like euro CAD too. Let's break this one down from a technical perspective. Okay, so euro CAD, this is euro CAD. We put a Fibonacci. We're rejecting, or we're trading below that 200-day. Just looking at the technicals here. Let me just delete everything. This is probably outdated. Okay, so euro CAD. This seems to be pretty okay here. This level, something like this, and that lines up right around with the. Oh, this is opposite. Whoops, my bad. This is how it's supposed to be. Okay, so this right here lines up with the 38.2. Okay, right here as well. I like this right here. That lines up with the 61.8. So anywhere within here, I think is okay to buy euro CAD. Let's look at the top setups page to confirm this first. But I do like the idea. Let's look at euro CAD. I may be getting a neutral reading. Let's see, euro. Okay, euro CAD's getting a neutral reading. So similar to the euro dollar, where I want to wait for a meaningful pullback here, I'm going to do the same thing with euro CAD. The fundamentals, the top setups page is not giving you that very bullish reading yet. So that tells me that this thing has some room to go ahead and decline further, which I would love to see there. So in my personal opinion, anywhere between the 38.2, the 50, and 61.8, I will be a buyer on euro CAD as of now. It looks really, really good. Remember, as long as the top setups page continues to flag that euro asset as a bullish reading, I would definitely like to see that. So I'll be waiting for a pullback. I'll put an alert here at the 50. And that seems like a pretty okay chart markup. But for now, too early to enter. If you have an opportunity where the euro US dollar can continue to fall further, then I'll wait for a pullback on euro CAD. But yeah, it looks very, very decent. So thank you for that. Looks really, really good. Analyze DXY. I think I did a good job there. If I didn't, go ahead and put that in the chat, and I'll do my best to go ahead and go over it again. You scared me. EdgeFinders +2, not only bullish. I'm in that short. Which one, Max? Which one are you talking about? Hey, Tiger, how's it going, man? Pound CAD looks better. Okay, pound CAD. Let's do that. Let's look at pound CAD. We looked at euro CAD. It's only good that we look at pound CAD. So let's look at the top setups page 2 to see how that one's looking at. So pound CAD's getting a bullish reading. Okay, pound CAD's getting a bullish reading versus the euro is getting a neutral reading. The technicals here. Let's go ahead and measure this move out here. We are at the 38.2, and we're also at the 50-day moving average as well. I like this level here. Okay. Upside potential when I look at take profit would be somewhere within here. Looks pretty decent. I'm not gonna lie. Pound CAD. Let's see what pound dollar is at the moment as well. Ideally, I would wait for a more pullback in the pound. Yeah, I'm gonna do that. I'm gonna wait for a pullback in the pound, maybe up into this moving average right here, which is not that far away. I don't think that's unrealistic at all. Yeah, maybe I move this up further. Yeah, somewhere around here, somewhere within this area, I'll be looking to go ahead and I would give pound CAD some more attention, in my personal opinion. But I like the trade though. I'll put an alert here as well if we can somehow find our way within the midpoint of this range. I like that pair. It's getting a bullish reading on top settles page too. So as long as we continue to see that pretty consistent there, I'll look to participate in pound CAD. Euro got bad number compared to the pound. We're coming out of the recent data. Yeah, that's one thing too. The UK has had a string of lackluster data, and it seems to be kind of turning a little bit there. So if that continues to go ahead and improve, the big debate, the big question that I have to ask myself is, am I going to be choosing the euro over the pound or the pound over the euro? And as of now, my kind of bias leans more to euro. Because again, the pound has been really struggling with some things. But if the growth continues to improve, I know they had a GDP beat. I think it was last week there, and the pound really liked that. If we continue to see kind of some moves in that direction, then I'll probably prefer pound over that. But I think right now it's kind of too early. I mean, Euro USD, you said it was bullish on EdgeFinder, but just a +2 neutral. The euro actual Max, yeah, my fault. The euro isolated right here is getting a bullish reading here, but euro US dollar, I believe it's getting a neutral reading of +2. Yeah, you're right there. So yeah, don't be too scared there. But again, I do think that the euro has some upside if you do get kind of a pullback here, a meaningful one, if that, maybe to 1.17. I'll be looking to go ahead and short the dollar. And again, that'll be via long the euro, long the Aussie, or maybe something with pound in it. Send me a private message. Okay, Max, I'll look at it later. How about gold? Gold has been kind of, I would say, stale, man. I mean, I don't know about everyone else here that has been trading, also the contributors here in the live stream, but myself personally, if I look for gold on the top setups, I have to put this all caps 1 second. It's getting a neutral reading of 4, so it's actually picking up some steam there. Technically speaking, it's down 1% on the day. I do expect some choppiness from gold. I've always said this recently. This seems to be a good level of support. Anywhere within 4,400 and 4,200 here. This is a strong level of support in my opinion. So if you somehow get gold into that level of support there, I think that's a good trade. Personally, I think that's a good risk-defined trade here. You put your stops below the recent low right here. The 200-day moving average is also right there. I think that's a good trade. However, the fundamentals need to be lined up. And again, also to the big one, which is oil and yield and the dollar need to be low. So oil right now, it is making some progression. You can see here that we are down approximately 28% here from the high. So that is a good news there. Yields as well seem to be coming lower as well, drifting lower. So we do love to see that. And so if you continue to see that alongside the central banks starting to say like, hey, we're looking to go ahead and pivot into an easing cycle, that would definitely fuel gold to the upside. So kind of my thought process there on gold right now. I don't want to chase this price. I would wait for some kind of a pullback. So maybe we are on the cusp of the gold story coming back into play. I think that's very possible. Again, you need to see yields lower, oil lower, inflation projections lower, and central banks looking to go ahead and ease rates. So that's kind of my thought process on gold. Again, I think that it's like okay to trade gold, but I think the story could be a lot better. And I would rather, for anyone that's looking to trade it, participate during the story when it's a lot better. Right now, it's still kind of iffy. The resolution the things going on in the Middle East still unresolved. That kind of throws a nail in the wrench there. So not quite good there. But yeah, gold for me, in my opinion, is very, very much stale. Takes guts for New Zealand longs, in your opinion. Let's go ahead and look at Kiwi dollar. I kind of don't think so, man. So Kiwi dollar pulled back into this level here. I remember making a chart markup post for the Telegram channel. And by the way, definitely go ahead and recommend everyone going to join the Telegram channel. It is completely free value. Every day we do some polls. We do chart markups. Yesterday, I didn't do that. My apologies. I was traveling there, so I didn't have a stable connection. But yeah, every single day, we are dropping something, bonus content, videos, discounts to prop firms, everything there. Everything that is of value to you. It is completely free to join. So definitely, I recommend joining the Telegram channel as well. We also have a free Discord as well, too. So if you want to join the Discord and chat with other traders and share ideas, things like that, feel free to go ahead and join. I promise you guys will not regret it. But going back to the Kiwi dollar here, we kind of were at this midpoint here. In my personal opinion, and my idea was, if you were to get a de-escalation or progress in that direction, then Kiwi dollar likely to the upside. And it seems like we're kind of pivoting into that direction there. We are trading above key moving averages, the 50 and the 200-day. And so I kind of like Kiwi dollar to the long side as well, right? I think it has some potential there. We did have some positive numbers out of Kiwi last night. And then obviously, again, if you were to get some kind of a risk off environment, then Kiwi likely lower. But as of now, it's been actually holding up its weight quite well. I would look to see the fundamentals change on the top setups page specifically. I know right now it's still getting a bullish reading, so it's at the very bottom here. So Kiwi dollar and Kiwi yen are getting a bearish reading, so that's not good. But if that story improves, I think the technicals here are kind of lined up in that direction. So I guess you guys can kind of pick up on this here. I'm kind of short term dollar neutral to dollar bearish. So on any pops, I'm looking to go ahead and fade the dollar. So that's kind of my stance right now. Now, again, I'm not going to hold on to that narrative quite strongly. If things start to change, if the dollar fundamentals continue to improve, then obviously I kind of flip my positioning there. But as of now, that's kind of my general consensus, is that I'm looking to fade the dollar on any pops. Recent CPI we pivoting into risk on, so comfortable with it. And pound and CAD are shitting long term. Oops, sorry for my French. Sorry. How long have you been trading? Since COVID is when I really started to really pick it up. Aussie, I would love, but already reacting to Aussie Swiss on the H1 H4. Aussie Swiss was one that I really did well with when I went long the Aussie basket as a whole. And I kind of regret actually ditching the whole Aussie basket trade. I got out of it because things were escalating in the Middle East. And so my thought process was, the Aussie being a risk on currency was probably not going to react well to that. And we did get a short-term, dip in the Aussie. However, it has since recovered. And if I had held on to all of my Aussie basket trades, I would have been doing quite nicely here. So Aussie Swiss is up. Aussie CAD is up. And again, I'm looking to re-enter if I get any kind of a meaningful pullback. But it doesn't seem like we are, getting there quite yet. Aussie Kiwi as well, elevated as well. Very, very strong upward trend. I want to participate in this, but again, I don't want to trade the highs here. So that's something I need to be mindful of. But yeah, kind of tough. I'm kind of flat here waiting for an opportunity. But again, euro dollar seems to be kind of setting up for a bullish play. We'll see how that happens. Another thing too that I have to be mindful of is that the stock market is very, very much elevated right now. So if I want to be short the dollar, the best approach will probably be waiting for a meaningful pullback, as I've said before, because if you get some kind of a retracement here in the stock market or in risk, then most likely dollar higher. So market is elevated. I'm not saying that it has to drop right now. I think it's a possibility that it does. But the meaningful drop or a meaningful correction in the stock market could happen at 7,100, which is where we're at right now, or it can happen at 7,500, right? I don't know when that's going to be. So for me to put some decent size behind any trades and trying to bet that this is going to drop lower is probably not the smartest thing to do. So that's kind of my idea there. You said Aussie Kiwi looks good on the 4-hour. I think the 4-hour for me would be kind of too short term. I would rather, swing trade this. And so if I want to swing trade it, I would wait for a bigger pullback. Aussie Kiwi specifically, maybe something like this. I would like to participate in. And again, to me, that's still kind of chasing a little bit, but that's a 1.4% drop. I'm going to put an alert right there too. It's pretty much what I'm going to do today when I hop off the stream here is just really start looking at the currency crosses, put my alerts there, and then tomorrow I'll go ahead and notify you, some things that I have found. I've been traveling, so I haven't really been too active there when it comes to the charts and stuff like that. But tomorrow will be a very good segment. CAD yen shorts. Okay, Aussie Kiwi. Hi, James. What's your take on pound dollar, pound CAD? I'm not James, so I'm not going to speak for him. But for pound in general, it seems to be like there's improving fundamentals, going on for the UK there. So, if you were to get a meaningful pullback in anything pound related, and you continue to see those improving fundamentals, then I would, go ahead and consider going long anything with the pound. But for now, I want to stay away from that. Aussie Kiwi looks like a meme coin. Yeah, man. Yeah. Did the ceasefire end today? I am not sure. I haven't seen anything related to that. Let's go ahead and see real quick here before I hop off, because we do have, I believe, Marco coming in right after me. When it comes to ceasefire, I don't see anything. Actually, as of 7:40 a.m., Trump said we caught an Iranian ship yesterday with gifts from China. I thought I had an understanding with Xi. We're getting ready to go military, the U.S. military ready to go in Iran. So it seems like, I don't know, I guess more military going out to the Middle East. Trump on extending the ceasefire again. He doesn't want to extend the ceasefire. So seems like maybe not an end. Maybe I'm missing something here. I'm sure Marco has been more up to date than I am on what's going on over there in the Middle East. So perhaps when I transition it over to him, he can do a better job at breaking it down. But that's my portion of the segment, guys. Again, join the Telegram channel. It is completely free value. And as well, get yourself a copy of the EdgeFinder. It is 40% off. So go ahead and definitely, it's the biggest sale of the year. So don't miss it. You have to wait a whole nother year if you want to get a discount as big as this one. So definitely go ahead and participate with that. Thank you, guys. Have a blessed rest of your day. Bye-bye.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment. So I wasn't here yesterday, I was traveling, but now I am back. What is going on in the markets? General summary, everyone is waiting for the ceasefire deadline to end. So over the weekend, we didn't have any sort of agreements. We didn't have any sort of bullish risk on news. So everyone is watching for that ceasefire deadline. Before I go into it a bit more, I do want to post the link to the jot form. So if you want to participate in the DNA Funded giveaway, check out the form, fill it out, and you will get entered into the giveaway. It's going to be a 10K one-phase account. What I wanted to say, when does the deadline end? The deadline for the ceasefire, I mean. It ends on Wednesday, I believe. So if we go down a bit more, you can see Trump, the US military ready to go in Iran. Trump and Iran were ready to go militarily. We caught an Iranian ship yesterday with gifts from China. Trump on extending ceasefire. I don't want to do that. Now, we all know that it's 50-50. It's completely uncertain if there will be an extension of the ceasefire or an escalation in the war. You can also see highly unlikely I will extend the ceasefire with Iran. That was yesterday. But I think it expires on Wednesday. So if you have the exact date, you can put it in the comment section, or the exact time. I think the date should be the 22nd, but the exact time, I have no idea. I don't even think Trump has any idea. What is going on as far as the markets go? How does my watch list look like? Or what does my watch list look like? Let's take a look. I have the Nikkei, which is the Japanese stock market. I have Aussie NZD, Bitcoin, and I have USD JPY. So those are the 4 things that I'm interested at the moment. The main problem in the markets right now, they seem to be fairly priced. So as traders, what we look for inefficiencies. If the markets are 100% efficient, or if they were 100% efficient, then you would get no movement. It would basically look like this. So the markets would look like this. You would have a line, and then we go up if there's a war. You would have a line, and then we go down if there's a de-escalation. So there would be very, very little opportunity to get in on those uptrends. You would need to have a crystal ball to forecast. That is what a 100% efficient market looks like. Of course, in the real world, we have inefficient markets. So you get trends and you get pullbacks and you get sell-offs. At the moment, as I mentioned, the markets do seem to be fairly priced. So the moves seem to be very small or kind of not even moving, especially if you look at, for example, the DXY, which has been stuck in range for a while now. But if you zoom in on the very short term, in the last few days, I would say we had very little movement, except maybe the S&P. Yeah, the S&P was raging up, but then on Monday we went up as well, filled the gap, and now we're flat. What we need is another catalyst. We need another event to move the markets. That event could be the ceasefire deadline. It could be an escalation. It could be further de-escalation. It's extremely hard to know. It's extremely hard to predict. We've been trying to predict it in the last month and a half. You just never know with Trump. One day it's risk on, the next day it's risk off. What the best suggestion would be, if you're new to the markets, to either be flat or to lower the risk, to drastically lower the risk. But at the moment, it's very, very hard to find opportunities to make money in the markets. Your safest play, there's no such thing as a safe play in the markets, but a play with good probabilities would be to buy the stock market on pullbacks. So that's what I'm looking to do on the Nikkei. I'm looking to see a pullback to the 20 MA. EdgeFinder, let's take a look. EdgeFinder, Nikkei. So Nikkei is bullish, which is great. That's definite extra confluence. The Japanese government is dovish. The new prime minister is dovish. Capital is flowing back into Japan. There are tax cuts coming for Japanese companies. So everything is pointing higher. When the war happened, we got a pretty big sell-off. But I think if the war didn't happen, we would already be deep into those all-time highs. Price would probably look something like this. So 66, 67, I think those are some definite realistic targets. I don't want to buy these highs. I personally believe that the market is a bit overextended at this point. So I do want to wait for a correction, bit of a pullback. Perfect level for me is the 20 EMA. Let's see the comments. Let's see comments. Hello, Simo. Hello, Cycling Club. Welcome, Sluggy. Heracross, welcome. Gold and silver, sure. It's a Marco Solo segment. It is. Do you find day trading better in this market environment? I find trading hard at the moment. I find generally trading both short-term and long-term hard in the current market condition than, let's say, in 2025. Especially lately with all of the ping-pongs back and forth from Trump, because your main edge is, or the main focus of the markets right now is the US and Iran conflict. And your main edge is what Trump posts or tweets or what Iran posts or announces. Okay, so that's your main edge. That is what is controlling the markets at the moment. Very, very tough thing to predict. With the Fed rate cut cycle or the Fed rate hike cycle, it's easier because you get steady uptrends or steady downtrends. So that's why I think it's a bit tough right now. But the S&P seems to be ignoring the escalation at the moment. We had a raging bull market. Looks like today we may actually finish bearish. So we may actually close bearish on the S&P. I think the best play is stocks at the moment. And I would say overall, swing trading is easier. In the current market, though, I don't know, maybe some mean reversion plays, those seem to be working at the moment, but prediction is very, very hard in this market condition. I don't like this environment, but as long as risk on continues, I don't mind. I agree with you 100%. So what Sluggy says here is perfect. Current market environment, very tough to trade, but stocks seem to be raging higher, and that's a bit easier to trade. So stocks seem to be ignoring the US and Iran conflict. Marco, would you say you hesitated with your Nikkei long? Or did something you were looking for not appear? As far as the Nikkei long goes, we never got a pullback to the 20 EMA. So the market exploded on the 8th of April, and my game plan was always to look for a pullback to the 20 EMA. Yes, we gapped lower on the 13th, on Monday, but we never touched the 20 EMA. So that's what I'm looking for. I think that is the exact thing that, for example, Nick is looking for on the, I was looking at the wrong thing. Nikkei is right here. So Nikkei, we never got a pullback. We never touched the 20 EMA. So I couldn't get in. It's part of my plan. It's part of the strategy to look for a pullback to the 20 EMA. That's interesting. So many people are having a tough time in this market condition, myself included, and what I've observed so far with other traders. Absolutely. And it's not just retail. It's, if you read any of the newsletters from Brent Donnelly, for example, even the pros are struggling because your main edge is predicting what Trump does or what Iran does. That is something that is extremely hard to predict. So that is why it's tough. It's not impossible. It's absolutely possible, but only a select few do have an edge in this sort of a market condition. That's why I'm also hoping that the uptrend on the equities continues higher and that we put this whole Iran and US conflict behind us, because in a bullish stock market cycle, that's pretty simple. I'm not going to say it's pretty easy, but I would say that is pretty simple to trade. Okay, in bigger picture, yes, but now I've adapted to risk on, so I like it if we whipsaw again. Then I believe I do agree with you. Marco, depends if Trump had a coffee or not. Depends on if he woke up on the left leg or on the right leg. CAD yen shorts. Eventually something will happen with JPY. It will eventually. The safest place to stay away from USD CAD. Marco, people who started trading on 2026 are cooked with this type of market conditions. Well, tough market conditions happen very often. They just do. So there's no perfect time to get in the markets. Maybe during COVID, after we had the drop, just before the rally in equities, or around tariffs, just before the rally after tariffs. If we look at the S&P, that was pretty easy, I would say. So maybe here was an easy time to get in, or maybe just a second. Let's see. 2020. Yeah, maybe here. If you got in just at the start of the equity bull cycle. Can you analyze GU? Sure. Swing trading a no-go at this type of market ping pong move. Marco, can you have a look at GU? Sure. I don't invest in stocks, but is it really not affected by oil prices? At the moment, doesn't seem to be. At the start of the war, it definitely was. So at the start of the war, we definitely got an effect on the S&P. I mean, the S&P sold off. But now, the Strait of Hormuz is still closed. Yes, there's a ceasefire. There's a general improvement. But Strait of Hormuz is still closed. Trump is still threatening an escalation. Trump is still threatening to put actual boots on the ground, which would be the worst possible option. So the stock market seems to be ignoring that at the moment, seems to be rallying, which is good. ICT is not struggling in these conditions. Absolutely. So ICT is definitely making money always, every day of the year. I think he has like a 95% win rate or something like that. But he can never make actual percentage on a real account. Weird. Trump's rant has found its way in FX markets recently. Everything is controlled by the price of oil. Pretty much anything that happens in the markets at the moment is controlled by the price of oil, except the move on equities. That could be separate, especially if we get no major escalation. This could be separate from the price of oil. Great convo, Slugs and Marco. Always awesome to hear different opinions. Okay, yeah. Let me post the link to the form one more time. So if you want to participate in the DNA funded giveaway, there is a form in the comment section. So fill out the form and you will get entered into the giveaway. Is the JPY ball out? Goodbye ball out. Market code Euro Swiss flip bearish. Euro Swiss. I'm looking at the 0.5 level on Euro Swiss, or sorry, 0.9. That's the level of a possible intervention. So if we do approach it, if we do approach the 0.9 level, I'll be looking for buy setups. Absolutely. We know that this is a level where the SMB, Central Bank of Switzerland, got vocal the last time. I did have a nice buy setup, which worked pretty well. Not this one, that one. So I'm looking to re-enter that sort of position. Same thing I'm looking for on USD JPY. So on USD JPY, I'm looking for basically a hit of the 160 level and then to sell. Just rinse and repeat. 160 sell, take profit on a sell-off. A good leg was the one on the 19th of March, or let's say the 8th of April. That was a good leg. This 17th was a good leg as well, but we never hit the 160 level where you could have sold. So you don't even need to get an intervention to exploit the price action on USD JPY. But if you do get an actual intervention, it could be a big one. So it could actually be a continued sell-off with large legs. Okay, let's see. Marco, look at NZD-JPY, gold and silver. I'm sure JP, what about NZD-JPY? Europe Eco overview. Okay, let's see. EdgeFinder. This is the Europe overview. So Euro impact is 60% bullish, stocks impact 40% bullish. So bullish Euro, bearish stocks. You guys also want to see NZD-JPY. Personally, don't have a clear opinion on NZD-JPY. Let's see the EdgeFinder. Top setups, NZD-JPY. Bearish score. Personally, there's an uptrend on NZD-JPY. I would not look to sell. On the yen, I'm being mostly patient. I'm not looking to trade the yen except on USD-JPY, where we may get an actual intervention. Okay, so we may get an actual intervention on UJ. That's about it. I'm not looking to do anything else with the yen. If we do get an intervention, the yen should gain value across the map. And you want to see gold with silver. So gold, I don't know, metals market has been pretty slow lately. You just had low volatility. Platinum, copper, okay, copper moving up a bit, but not much. Silver flat, gold is flat. Very, very flat price action on the metals market at the moment. As a trader, you should always be searching for an edge volatility. At the moment, that would be equities. So S&P, NAS, Nikkei, FTSE, the DAX. Okay, I wouldn't touch the DAX, but you get what I mean. Metals market is just flat. So the opportunity to make money here is very, very small. And also the main issue is EdgeFinder is neutral on gold and neutral on silver as well. Not great, not great. So I'm not looking to take any setups on gold or silver at the moment. I don't want to get stuck in the range. I don't want to get chopped up in the range. Unless some volatility can kick in into the metals market, I'll be flat. Again, mostly I'm focusing on equities. Let's do the giveaway now. So let me check out all of the entries. Today is the 21st of April. So let me find all of the entries. 21st. Okay. To the wheel. Just a second. Let me check something. Okay, go to the wheel. Spin. Okay, let's see. So, Malik or Victory? Looks like it's Victory. So, Victory, JP, congrats on being the winner. You have won a 10K one-phase account from DNA Funded. Wait for an email from me. So after my segment ends, I will send you an email with the discount code, or it's basically a code for a free 10K one-phase account. By the way, if you guys want to get funded with DNA, make sure you use the code A1Live, which gets you 25% off any DNA funded challenge. Okay, so the code A1Live, 25% off any DNA funded challenge. This is my personal 25K two-phase funded account. I'm currently down $256. So looking to get a payout. I did request a payout, but it got rejected. I requested it on purpose because I messed up my max daily win. So there is a consistency rule. And because of that consistency rule, you can't have a huge winning day. So in order to reset that, I requested a payout, just a small one, $230, which got rejected because I broke the rules. So now I'm back to break even. Well, I was back to break even, and I took some losses. So now I'm down $250, but still battling it out, trying to get a payout. I can show you what I messed up. So if you go to the P&L calendar, this was a problem. So on the 16th of April, I made $988, which definitely messes up the consistency rule. So I wanted to reset that. And from this point on, it has been reset. Okay, getting back to not a new challenge, dashboard. Yeah, dashboard. What I wanted to mention, A1Live, 25% off any DNA funded challenge. Okay, so could you have a look at SPX versus gold? Yeah, sure. You can take a look on TradingView, or did you want to see? Or I think there's an indicator on the EdgeFinder, if I'm not mistaken. Or is that, I think that's gold and Bitcoin. I think that's gold and Bitcoin. Anyway, this is it. Do I see anything here? Not much. Not much. I mean, we're kind of at a support level. You can say that. But yeah, I'm not placing a lot of emphasis on this particular chart. So let's see. So why did you close all, Marco? Because I had to request a payout, you need to close all of the positions. So I closed all of the positions, requested the payout. I knew it was going to get rejected, so I just wanted to start over with a new account. And I'm going to be careful about the P&L calendar. So I'm going to be careful to have the max day below 400, maybe below $500. This is far too big. This is like too much as well for my personal style and what I'm trying to do. So we still have 5 more minutes left. Let's just go through this. The Nikkei, I pretty much told you my game plan on the Nikkei. Aussie NZD is something I'm considering to take. Possibly a buy position. We're close to the 20 MA. I think the EdgeFinder is bullish. Should be. Yeah, EdgeFinder giving us a very bullish reading, which is nice. This is a huge uptrend. If you zoom out, there's no resistance. So we have a pretty clear path to go up. Okay. So that is the game plan on Aussie NZD. Possibly buy at the 20 MA. Of course, you will be notified in the A1 Discord. If you want to join the A1 Discord, there's a link in the description of the stream, and you can use the code MARCO. You can get 25% off, and you basically get all of my signals, all of the trades, all of my knowledge. You get a great chat. You get a chat with the real traders, profitable traders. You get Nick's signals, iWind. Alan is in there as well, sharing his analysis. Did I miss someone? Chris Pulver. So you get a bunch of let's say trade ideas and a bunch of knowledge all packed into one. I highly recommend it. I think it's the best Discord in the space. BTC, Bitcoin has broken out. This, I would say, is one of the most interesting charts from last week because we did break out. We didn't break out with a lot of conviction, but we got a breakout nevertheless. So we had the flat range right there, overall flat. Then we went into that upper line and we broke it. What personally I would have loved to see is a continuation of the bullish momentum. So 17th of April was bullish. I would have loved to see the 18th of April continue to the upside as well, which didn't happen, unfortunately. I'm looking for a bit more bullish price action. So I'm looking for a bit more of those blue candles on the daily, and then I would be looking for a pullback to a 20 MA. EdgeFinder is bullish. It definitely is. So EdgeFinder, very bullish reading right there, which is great. But I need a bit more conviction. I need a bit more bullish price action. I think there's no sellers left. I think we found the support. I think we found the bottom. And now we can easily go back near the all-time highs. I do think we can. You know, when did the pullback start? It started in October 25. Yeah, maybe we need a bit longer crypto winter, but I would take a stab at it. I would take an initial buy position. Yeah, if we get a bigger breakout, that could work. NUSD/JPY is the last thing on the watch list. Here, I'm looking for a hit of the 160 level. I'm just going to sell at 160 and rinse and repeat. That's basically the game plan. So the 160 level, BOJ has been really vocal about it. They don't want to see the 160 level get crossed, and they will defend it. So selling at the 160 level, targeting a sell-off. You don't even need an intervention. You just need for market participants to get scared, and you need for like the 19th of March or the 31st of March or 8th of April or maybe even the 17th of April where you get a sell-off, and then you take profits. Very simple stuff. Okay. Let's see, is there any chart request? Is there any chart requests? Selling CAD has been a pain trade. CAD. Let's see, USD CAD. To be honest, USD CAD, I know some of you were looking to buy it. I wouldn't. I think we stay flat here. What has the EdgeFinder been saying? Let's take a look. USD CAD. Neutral score, so you know the game. If the EdgeFinder is neutral, I'm not looking to do anything. But I know there was an idea to buy the dollar, sell the CAD. That was the idea. Yeah, I don't think it's the right move. I just don't see it as being the right move. Anyway, that's it from me. Don't go anywhere because you have Tiger coming on right after my segment. Thank you very much for watching. Check out DNA Funded. There's the discount code A1 Live. I'll be giving away one challenge per stream for the rest of the week. Good luck in the markets. Let's see what happens with the ceasefire. Again, the main thing moving the markets at the moment is the ceasefire expiration. Will there be an escalation or a de-escalation? Let's wait and see. So that's it. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Tuesday. Hope you're doing well out there. Yeah, just speaking of Ola Prime and consistency rules, they are definitely a pain in the butt. I have to agree with that wholeheartedly. It's like they're capping your winnings at times, guys, but you know, they do that because they obviously are trying to weed out the YOLO traders, the ones that get lucky once, and then they take their one pay and then they go. So it's kind of a weird situation, but that's just their way of, I guess, protecting their business. So but yeah, speaking of Ola Prime, they did actually, I saw somebody comment 15%. Yeah, so they were doing a 15%. And I think a lot of companies do this for their instant funded options. But I did get an email here just a couple weeks ago that from Ola Prime, where it sounds like they changed the instant funded accounts from 15 to 25%. So they've actually increased it a little bit, which is nice to see. So I just thought I would throw that note out there for anybody that might be considering an instant funded option and skipping the challenge phases themselves. So hopefully that appeals to somebody out there. As always, you can get a discount of 35% from Nick's discount. You see there the QR code on the screen, as well as if you wanted to manually punch it in, go to A1 Live in the code and you'll get 35% off the account of your choice. So with that, let's see here. Yeah, Max B, yeah, the 2% risk rule. You know what? And I think I heard that they changed that too. Don't quote me on that. I haven't been in the rules as much as since I was working there. But I thought I heard where they changed that rule too. But yeah, I'll have to look that up and update everybody tomorrow. So either way, yeah. So either way, guys, there's that code there. If you have any questions, always reach out to me. And let me know if you guys have any tickers over here that you'd like me to check out. Yeah, we had the risk off gap on Sunday, and we've just still on a lot of the top line assets just been kind of going overall sideways, just kind of bracing for impact on this deal or no deal situation that we have tomorrow. So I thought that expiration was supposed to end today, but I was also watching Bloomberg yesterday, Bloomberg Live. And the reporter popped on and said that he just got off the cell phone call with President Trump. Everybody in the studio was acting surprised that he had a direct line. They said they'd never seen anything like it. But anyway, he said that President Trump did want him to get out, that the expiration was tomorrow. Okay, so it sounds like it was pushed out 24 hours. Yeah, because today was supposed to be the 2-week deadline, wasn't it? This evening. So. But anyway, yeah, they pushed it out. So I think that's kind of a good sign, but we shall see. I think that's maybe, kind of like what they said, and I agreed on there. if they're trying to, if he's delaying it by a day, is that a sign they don't want to be dropping any more bombs? So I don't know. That's kind of the way I agreed or looked at it and took it. So anyway, VIX pretty well going sideways, talking about the volatility. The dollar index itself, remember, we have been bouncing off that zone, that daily zone that we had, and we are still squeezing in between this overhead minor supply zone that's in the middle zone, guys. Okay, the zone I don't like to trade in. So it is still just kind of going, going sideways, basically between 98.40 and 98. So give or take about 40 points there. And the Kiwi dollar, I do believe, is still the only asset we have that includes the dollar. Yeah, Kiwi dollar shorts as a potential, and that is basically it. So so that's your Dixie, that's your dollar index. Again, okay, everybody just waiting here. Taking a look over here at oil. And so oil is, let's see, oil is giving us that bullish signal, but the downfall, guys, right now is the trend. As you can see over here, our -2 score just for isolating the trend there. So almost everything else looks good on this thing, but this is one leg of that three-legged stool. And as you can see, we're just getting nothing but lower lows and lower highs. So nothing's really changed since yesterday. We've just been going straight sideways. Again, about a 20-point range there, or 20-cent range per barrel, if you will. So I've already drawn it up yesterday. I think we could get a bounce if we do, if we get a negative result from tomorrow's expiration and they don't write a deal and bombs start flying again, roads, highways, bridges, power plants, that kind of stuff, guys. We don't want to see that. We really don't want to see that. So hopefully the cooler heads prevail. But if not, okay, and if that stuff does resume, then I could definitely see getting us a push up again. Now we do have this supply zone that we'll have to chew through. Okay. So just keep that in mind. I think this is, let me get my volume spread analysis. Okay. So that is a pretty distinct supply area, but not really a whole lot of trading activity really took place down here. If we're just looking at the volume spread analysis. Now it says ATR, guys. So the ATR is actually this white line. Okay. That's the average true range. I just decided to combine the indicators to say, so that's why you see a funky white line just kind of hiding in the shadows. That's my average true range. So that another one. So even if we did something like this, okay, or we busted through this other one over here and then got a retracement down, I think that would actually be better. Because now we're breaking two structures. We're showing some strength going up. And again, if bombs start flying again, at that point, bombs are flying. Okay, God forbid. And maybe we get a good piece of news that's just a rumor and it pushes price back down. That's where I'd be waiting for it on a demand zone for a buy. And then obviously just take it up to your swing high here for a take profit, a TP. So that's kind of the projection I'm looking at for oil. Again, guys, trading is just like shooting pool. Okay, if anybody's played 9-ball or 8-ball or snooker, you're always trying to look ahead 2, 3, 4 balls on the table, right? So that's kind of the way I'm looking at oil right now. Just projecting a few moves ahead here to see if we can get what's in my head out on a chart. Of course, you guys know markets don't care about what's in my head, but when my head sees it, I pull the trigger. If my head doesn't see it, I'm out. I'm skipping it. But yeah, the reality is it's just too much of a downtrend right now. So there's no play unless we have a few things happen. Need more information, guys. It's the most boring answer you're going to hear out of us, but that's the case. We have to have information. We can't just wake up and say, hey, I want to go buy oil. hey, I want to go sell oil. Okay. The fundamentals, the sentiment, the technicals, they have to speak to us. So just keep that in mind. Okay. I kind of look at myself as a retired trader, if you will. Okay. I'm not going to trade something unless it forces me out of retirement. And if I get the fundamentals, the sentiment, the technicals in my favor, okay. If I can't look at it and, tear it apart, like you guys know I like to do, especially with my own zones. If I can't tear it apart, if everything matches, I get into the trade. Simple as that. So the key is wake up not expecting to do a trade. Wake up and just see if the puzzle pieces fit with what's in your trade plan. If they are, go for it, right? Don't hold back. So that's oil. Brent's Brent's kind of the same picture. I kind of drew up a similar path. Let's see here. Gold and silver for you guys. Okay. We obviously had the gap down after the weekend when the new trading week started, because of, a little bit of the mixed information we're getting out of the Middle East. Part of some of the leadership thinks we're meeting them. Some say that they're not. So there was that little bit of confusion, and not to mention the oil tanker that the U.S. did destroy the engine room from. So that created that risk off gap on a lot of these assets. And then it's just been going sideways. So money flew back into the Dixie, as you can see, because we did get that gap up. Now it's kind of retraced itself. And so obviously the opposite on gold and silver is to gap down. Gap down and go sideways. There's gold, there's silver. So no plays right now as far as gold and silver over here on the EdgeFinder. In fact, I'm going to go to my neutral just to see where we are. I know we're neutral, but are we closer to -3, -4, +3, +4? Silver is right here. So we're at a +3, and then gold's a +4. So there you go. Maybe one more piece of dollar weakness, and we could be having some gold on our hands. So it's a good time to start prepping for it. And as far as demand zones underneath, I kind of drew it already up. No, I think I drew that up this morning. A zone all the way down here at the 74 level on silver, I should say. Now, for silver, we are currently chewing through, a little bit of a zone of demand that also was kind of coinciding with a former resistance and a former resistance from further back in time. But as you can see, we've already bounced and wicked into it. So the play is over with, guys, from this 78 level, from the 77 to 78 level. The play is over with because that zone's been mitigated. Now, it still remains support resistance, okay? So if you're a support resistance trader, which I'm not because I look at fresh demand zones only, but if you're a support resistance trader, you're getting down to a pretty interesting area again. But I personally want to see a deeper discount on silver. Again, especially if we get that bullish signal on EdgeFinder, which currently we don't. And this is a very similar picture actually to what Bitcoin's looking like, which I'll get to next. But give me a discount down to the 74, 75, which is a nice psychological number. Just by default, guys, as soon as this thing touches, if it touches 75, you're going to have people pulling the trigger. You're going to have buyers just because it's a round number. And then they're going to be putting their stop losses where? Right here inside of that demand zone. Okay. So that's what I'd be looking at for silver. And then speaking of Bitcoin, and then I'll get to what you guys have going. No audio? Oh, we're alive. Okay. Yeah, sorry about that, guys. I get some weird signal at times. I don't know why. I've got Google Fiber, and it's the fastest internet, but still, there's times where I'll have this issue. So I'm good now. Okay, thanks, guys. I appreciate that. So anyway, yeah, just speaking of Bitcoin, guys. Am I still good? Okay. So yeah, speaking of Bitcoin, guys, I've already drawn this up. I'm looking for a discount. Now, remember, I got my money already from this 2-hour demand zone last week. It's already been mitigated. Yeah, it hasn't went 50% of the way in, but I'm going to ignore that. Okay, 50% would be right about there. And you can see the wick went just a little higher. So, okay, perfect. So I'm done with this demand zone. Okay, I'm not going to touch it again. I'm looking for a bigger discount. Obviously, we are getting a nice bullish 7, I think it was. Go back over here. We're up to a 9. Okay. So we were at 7 this morning on Bitcoin. And as you can see, we've gotten a little bit stronger. So that's even better. So yeah, the same thing rings true though. This may get too strong to where I may not get this discount, guys. But that's ultimately my favorite play. And we're talking about this demand zone down here, which, as you can see, had 3 expanded range green candles that broke structure and then inevitably just kept on going. The best thing about this demand zone, if you ask me, is the fact that the leg out candle had a big red ultra high volume spread analysis candle. So that tells me there must be some institutions playing around there. Big banks, firms on Wall Street, hedge funds, Bill Gates, maybe the president. I don't know. People with a lot of money, guys. That's the point. A lot of money took place right here in this move up. So if I am a hedge fund, a big bank, a whale, and I started my position here, maybe I'm trying $500 million position, guys. Some of these banks, some of these guys put in gigantic orders. Maybe I only got in part of my position before this move happened. Okay. They've already seen this move take place. So if they get a discount, they're probably going to put in the rest of their order, or at least more of their order, and have that play happen again. So that's the way I see that demand zone down there, 71,000 level, just ahead of the 70,000 psychological number. Hair across, yes. So my entries are always on the zones. When price enters a zone, I don't just immediately limit order unless it's something that I really, really like and I know that I might miss it when I go to bed at night. I'll do that from time to time. Just everything's lining up. It's a grade A trade. I don't want to miss it. Yeah, I do limit orders like that. But for the most part, I'm on my computer all day. So, I just assume just wait. And that way I can go down to a smaller time frame and look for a bullish engulfing candle in this example, or a candle with a wick underneath, or an inside bar, or just a one hour bullish reversal candle on this chart, and then a break of that. There's a few different ways I do that, because at the end of the day, when I see that price is trying to move around, I've got to verify a few things. I want to verify that RSI is oversold in this example. So go down to the 20 level, and then make sure my moving averages, talking about my, I think I pulled up the wrong ones. Making sure my 50 EMA is above my 200 EMA. Good grief, I can't talk. I got to make sure my 50 is above my 200, just like it is here. And I want price to pierce the 200. So in this case, it has no choice. Okay. So as long as all those things are met, I'd probably, on this particular one on Bitcoin, I do believe I have to look at this. Oh, no, I guess I can look at that a 1 hour as well. So yeah, just get a simple drop into the zone and then a 1 hour close up and a break of structure, a break of that candle, break of that 1 hour candle. So it sounds it might sound complex, but it's just like anything else, guys. A brand new job sounds overwhelming. And then you get used to it, and then it's just second nature. So yeah, I got to see a little bit of confirmation on the smaller time frame for sure. Hey, air across. The good thing is, for every opportunity we miss out on, there's another one right behind it. That's the good thing about markets, guys. We always, especially when you're newer, we think, oh my gosh, I missed the perfect entry. Okay, well, there's going to be another one right around the corner. I think so many people look at it like it's a slice of pizza or pie, that there's 8 slices to a pizza, right? Typically, depending on where you're at in the world. And then it's gone, right? That's not the way opportunities in trading work. There are far too many opportunities for anybody to possibly get. Sometimes it may feel like it, especially if you're a higher term trader, longer term trader, daily 4 hour. Sometimes it might feel like an eternity in between trade opportunities, but that's just where over time you just kind of start studying and gaining more and more assets to have under your belt. See, I started with FX only, and then I got to the point where I wanted to branch out to have more opportunities. So then I started getting into the indices, and then I started getting into gold, silver. And even though I used to talk bad about Bitcoin, okay, I eventually got into Bitcoin, and now I like trading Bitcoin. I always said if Bitcoin would ever start behaving like a fiat currency, not being so crazy volatile, then maybe I'll look at it. But right now I hate it. But it's gotten to that point. Okay? Supply and demand works pretty well on it. It's obviously a liquid asset. So as long as it's a liquid asset, I'll trade it, because supply and demand requires a liquid asset. In other words, I don't want to be trading penny stocks on a supply and demand, with supply and demand zones. I still will look at them, because I did go through about a year where I was playing in the penny stocks, guys. You want to talk about the wild, wild west. And it just works a little different, because think about it. Big banks and institutions can't trade penny stocks typically, right? It's too thin. The liquidity is too thin. So whereas as a currency trader and all these other assets that we look at, these are highly liquid. These are things that everybody is looking at. Hedge funds, big banks, institutions, well traders. But when it comes to penny stocks, they can't do that. So you're playing with nothing but retail traders. So it's kind of interesting. The biggest thing I took out of trading penny stocks versus everything else was the fact that a lot of rules don't apply, because you're literally just going up against somebody who typically doesn't really understand what they're doing, unlike currencies where you're going against the banks. So if you can't beat them, join them. That's why I say I like to trade like a bank. I want to see what they're doing and ride their coattails. But when you're in penny stock land, some of those silly things that you read in technical analysis books actually do work a little better. Okay. Things like breakouts, panic dip buying, VWAP bounces. Okay. Breaks, just simple break a structure. Some of those very simple, very basic things that we talk trash on as FX and gold, silver traders and all that. Some of those things actually work in penny stock land. But the problem is, the liquidity is so thin that it takes not even a second sometimes to lose 20, 40, 100%. Because I used to play around with runners that would go 200, 300. I had one that went 800%, and sometimes 1,000%, guys. And this all takes place within a handful of minutes. So that's why I say it truly is the wild, wild west. But you can actually get away with some of those very basic, breakout type trading styles, if that makes sense. So yeah, but I got to say, it is fun. So if you ever get to the point where you have some FU money, or, you're making some decent money on this stuff, go play around. If you want to really challenge yourself, go play around with some penny stocks. Okay. It's some crazy stuff. I read a book by one of the best penny stock traders there is. I can't even think of his name off the top of my head, but yeah, it's crazy stuff. Anyway, I digress, guys. Sorry, I'm getting off on a tangent. If you guys have any tickers, let me know. I do have 7 minutes. I thought I would take a look, because, guys, we're getting bullish scores on all the indices. But again, we're just too expensive right now. Let me go over here to the CFDs. Yeah, SP. Okay. And I kind of did this morning on this. But yeah, we're, excuse me. So again, we had that risk off gap. All these gaps have been closed on the indices over here. That was the S&P. This is your NASI. Gap down, close the gap. So we're back to basically the Friday closes on all this stuff, which just basically means they're too expensive. They're too pricey. They're in premium zones. I need discounts on this stuff. Really do. Because if I look at my daily on the right, all of these have the 8 above the 21. 8 above the 21, not to mention higher highs and higher lows. There you can see S&P, we've broken, actually we did that as of Thursday, broke and closed at the top here, but it's just too pricey, guys. If you scroll all the way out to like a weekly chart, let's see here. And there's kind of a trend line, a channel, if you will. Okay, we're talking crazy far out times, but let's get this connected. Okay, you're starting to bounce into some of this higher structure from 2022. Obviously, this recent structure. So there you go. We're bouncing off of that. Now, I've seen over the weekend, I was watching some people talking about just that fact alone, that we are bouncing. So even though we're getting nice bullish signals, the question is, are we going to hit some of these overhead resistance points on these higher time frames And I'm sure that could probably go all the way back even further. Yeah. Well, give or take. Here we go. Connect it there. So the point is, we are in some pretty high prices. Even that number one, well, that for one, but also we just need some pullbacks. I don't know how else to say it. So 7,000, okay, on S&P as an example. You can see maybe a little bit of activity happening down there, but it all hinges, guys. I mean, can't say it enough. It really all hinges on what happens tomorrow. Are they going to kiss and make up, write a deal up, or are they not? And yeah, guys, go find me on Trade Like a Tiger. Nick did just drop the link in there. If you guys want to go subscribe to me over there. I'm trying to get more material out. I've been so fixated on my new project I've got going on during the morning hours. I basically take a break from it so I can come and stream with you guys, which I love. But yeah, I'll start getting more and more of my own material out at some point. I just got to my hair is on fire right now with a handful of projects. And Ola Prime actually just reached back out to me. They're wanting me to help them out on a Reddit project. So I might even be doing that, but that's only an hour a day. I can do that in the evenings. So no big deal. But yeah, I'll get some more of my own stuff. I've been playing around with CapCut. I've got CapCut Pro now, and it's got an AI feature on it. So I've kind of played around with a lot of the transitions and captions and fun stuff like that. So, trying to dress up some of my content a little bit so it's a little more presentable. So should start getting better, and I should start getting more of that out, excuse me, in the very near future. I got allergies from Arkansas over the weekend. I'm still trying to get rid of the rest of it. Euro Kiwi, says Biggie Dub. Let's go look at it for you. But yeah, just to finish on the indices, guys, I got to have discounts. It's all too expensive. Okay, Euro, New Zealand dollar. Let's go look at that. Euro, New Zealand. And I do believe that was the one that was not quite on the list yet. Is that right? Yeah, Euro, keep in mind, just before I get to the chart, is the strongest currency. Kiwi is the weakest. But this is just the fundamentals, which I would say is probably the most important, but not necessarily right now. Because there's a few other items that are not bullish. And obviously, where's the biggest drivers right now? Geopolitics. Okay. Whether we like politics or hate it, or geopolitics or hate it, we got to know it. We got to understand it. We got to see what President Trump is posting. We got to see what Keir Starmer, okay, or some of these other world leaders. It's good to understand what they're talking about. The bankers, okay, follow them on X, whether you like them or not, follow them. Truth Social, okay, because their words move markets, especially President Trump. We all know this. But anyway, let's just finish up the day with Euro Kiwi for you. Okay, so that's an old man zone. I can delete that. Let me get my other chart back up over here. Okay, so remember, I think I might have mentioned this yesterday. So this is one where we had a really strong trend upwards. But the alligator's mouth is starting to slam shut, guys, and we've totally reversed this thing. So I just want to see real quick, even though it's neutral. Okay, it's a +4. Yeah, I figured it was pretty close considering the euro was the stronger, Kiwi was the weakest. If we do end up getting some type of euro strength or Kiwi weakness, then yeah, it's just nothing more than looking for a discount. But the challenge we have now is we've got a pretty decent series of lower lows and lower highs if we just get rid of the drawings for a second. 4-hour chart, okay, lower high, pretty much an even or double bottom even here, but lower high, and now we got our lower low. So we really need to start changing this structure to the upside. And I kind of drew that up, I think, yesterday. You might have been the same one that asked me this. Yeah. But yeah, from yesterday till today, that's all we've had is just a drop. So it's really just kind of continuing this short-term, 3-week trend down, if you will. So I just need an overall move back up. Okay, and I'll have to update this now. So maybe it would look something like this, because we do have a supply zone there we got to fight through. I don't know why I have it colored green. That should be red. But anyway, break structure. And then maybe look for a demand at that point, guys. Okay. But again, just like I said at the outset with the boring information, I need more information. So hopefully that helps. Guys, we've only got about 30 hours until we get the decision, the D-Day, if you will, unless President Trump does something crazy, okay, like he can. So just be careful today. Be careful tomorrow as well. We'll probably give you some more reminders tomorrow. And let's just see what the heck they're going to do in the Middle East, see if they're going to cuss and discuss, kiss and make up, or start dropping bombs and fists again. So be careful. We'll see you tomorrow, guys. Have a wonderful day. Peace out.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.